Why does a stock go up or down in price?
Hi, this is Pat Walker at Mission Winners.
Getting started in the stock market 101. A lot of people like to leapfrog ahead and just really plow into it quickly, and they don't ever get the basic foundations down. And I'm telling you, if you get the basic foundations down, and we're going to be discussing this extensively, we get those basic foundations down, we will be ahead of the competition. We will be better than the competition. You can say, well, how can that be? We'll know more than the competition. And that's really important because, folks, let's be honest, we are competing against other entities. Now, a lot of people say, oh, you can't compete against the institutions. I disagree. I disagree completely. We have edges. We have edges that we can use. We have control variables that we can use to help us in our selection. And remember this, we can glide in and we can glide out without a problem. Institutions can't do that. So we have a leg up over them in many respects. So one of the first questions people ask is this: why does a stock go up in price? I was an IBD co-leader for 12 years. I've done a tremendous amount of research over 30 years on the stock market, on stocks. Why do stocks go up in price? Why do stocks go down in price? And I ask this question a lot. And these are some of the answers I get. And I'm challenging you. I'll ask you right now. Why does a stock go up in price? Many people say, well, they have a really good product. Oh, okay. Or they have a really good service, better than the competition. Oh, okay. That's good. That's good. They have great earnings. Oh, yeah, sure. And a lot of people try to make it more difficult than it has to be. Why does a stock go up in price? Hey, there's more buyers than sellers. That's it. That's it. You can have a company with great management or a great product or a great service that's better than anybody else. You can have a company with great earnings. You can have a company with great sales. You can have a company in a great market. But for a stock to go up in price, you need more people buying it, more institutions buying it than selling it. That's it. That's it. If you remember that, you will be ahead of many people. It's a fact. Think about it. I can show you charts of companies that have great earnings and sales, and the stock ain't doing nothing. I can show you charts of companies that really don't have great earnings and sales, but the stock is going up. There you go. So let's remember that. What moves the price of a stock? It's you and me. What makes it go up in price? More buyers than sellers. Consistently more buyers and sellers. Take the big picture. Always remember that. Now, are institutions important in the stock movement? Oh yeah, they're big. They're the big shakers, okay? So what do we want to do with that knowledge? We already know that we want more buyers than sellers. And when I say more buyers, I'm talking about individuals. I'm talking about institutions. I want them buying. I want these entities buying, okay? And we want to go along with them. We tag along. Why does institutional sponsorship matter? Because that's big money. That is the big money. You can say, what do you mean by institutions? I'm talking about mutual funds, pension plans, profit-sharing plans. I'm talking about hedge funds. I'm talking about mutual funds. I'm talking about ETFs. I'm talking about the big entities that plow and buy maybe millions of shares of stock. Now, are they going to buy it all in one day? No. They accumulate it. They've done their work. But you like to see institutional sponsorship. Now, how can that be? How can we see it? Well, in the chart, we can just see a good trend. We can see that it's been going up. Look at this. Weeklies. I mean, that's it, from 60 up to 400. That's institutional. That's money buying. I mean, look at the volume on each of these weekly bars. I mean, this bar right here, the volume on this bar, 93 million shares on that bar. 93 million. That ain't mom and dad buying. That's some serious coin. So yeah, you want some institutional sponsorship. You need that because they'll move the stock. All right. Now, is there a way to measure it? Well, there's a couple ways to measure it. One of the ways to measure it is thing going up in price. Okay. That means they're buying it. More buyers than sellers. If it's dropping in price, more sellers than buyers. That's simple. Another way to measure it is just the accumulation distribution rating. An accumulation distribution rating, A, B, C, D, or E. What are we looking for? A or B. A means they're really buying it. B means they're buying it. They're buying it. C means they're neutral. What do we look for? A and B. A and B. It's being bought. Strength begets strength. Isn't that great? See, this is what I love. Systematizing things, just making it easier. Everybody tries to do a million different things. No, it's better to be the master of a couple of different setups, chart patterns, own those, commit to them, hone your skills on those, and you will be better than most people. And how do I know it? I've been doing this over 30 years. I've been teaching this for a long time. People just fly out of control. They go from they're like hummingbirds. They go from one thing to the next. Oh, I'm going to try this. Nothing's great there. I'm going to the next one. Stick with it. Work it. Just keep working it. So, 2 things we've covered so far. We've talked about the charts. Buying and selling. Trends. Getting in line with it. Stocks going up in price. We've talked about institutional support. You've got to have institutions supporting it, buying it with us. And that is measured by price action combined with volume. Which leads to a very important point. Each price and volume bar talks. And what do we want to see? We'd like to see, these are green bars and red bars, right? Green is up, red is down. Pretty original, huh? I thought of that myself. It's a big trade secret. Just kidding. So what are we looking for? We're looking for heavier green bars, heavier. They're buying it more than they're selling it. You want to see a great tactic? I'll share it with you. Look at this. Tesla just going sideways in August. Up, starts to drop on a pickup in volume. Up, falls a little bit more. Less volume. Falls, slight pickup in volume. Okay. Still above the rising 50. Oh, look at that. Lifts off on this bar. Look at this bar. Look at price and volume. This is so awesome. Look at the volume spike on this bar. On this bar, the stock did, right here, volume of almost 22 million shares. On this bar, the volume was 8.6 million. 8.6 versus 21.9. This bar here is, oh, that's a heavy volume bar. It did 8.9 million shares. On this bar, as I said, volume, almost 22 million. They bought it. Here's an investing maxim for you. People talk with their mouths and vote with their pocketbooks. Go where they're voting. Go where they're voting. How is that seen in a chart? By price action combined with volume. I'll show you another example. Right here. Down on a pickup in volume, up on less volume, down on just about the same volume, up on less volume. But note, price, volume, and now we combine it with moving averages. What's this moving average doing? This is the 50-day. Well, golly, Pat, looks like it's going up. Thanks. Now we know what's going on. This is the 21 EMA. This is the 8 EMA. You've got clean and simple tops that a 6th grader could draw this. Just take out the tops of that line with a volume pickup. They voted. As I stated, people talk with their mouths and vote with their pocketbooks. Price and volume. And note how it closes on that bar. right near the highs. It did not run up and fade down. It closed near the highs. Closed up. Gaps up on a pickup in volume. Goes up on even heavier volume. Look at this. We owned this. This is great. Oh, sell it. Why? Why? It's going up. Let it work. Let it work. Could you sell some off on an emotional gap up bar like this? Sure. Sure. Definitely. Clean and simple. It works. Do you sell it all? No. Why not? And we talked about why do stocks go up in price or why do stocks go down in price? There's a great way to measure it. Moving averages, as I stated. This is the 21 exponential moving average. This is the 8. This is the 50. What's the trend? The trend is up. The trend is up. Let it work. Starts to slip here a bit, but the trend is still up. Let it work till it quits. By so doing, you can ride trends much longer. Really key in on the daily, the weekly, as I stated, and maybe the hourly. Let it work as long as possible. I'll also share this with you. You get a good one, put an alert on it, and don't even have it on your front page. Don't even look at it. Let it work. Just let it work. Have an alert set, but let it work. So, we've covered some very important things here. Why does a stock go up or down in price? It's really an important question. And we realize the reason why is there's more buyers and sellers. All we strive to do is get in line with that trend. Find a good entry and ride the trend until it stops.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.